Hello, my dear students. Lucas Commerce Academy, the power of accounting, welcomes you. Today, I want to start bills of exchange. Bills of exchange, which is the most important chapter. This chapter I can explain you by taking one example. Suppose A sold goods to B for cash, say rupees 10,000. Okay. Here A sold goods to B for cash rupees 10,000. So this is the cash transaction. In this transaction, A receives cash immediately from B and B takes the delivery of goods immediately. Okay. So another example is goods sold to B on credit. Okay, rupees 10,000. So this is the credit transaction. A sold goods to B on credit. This is credit transaction. In this transaction, B takes the delivery of goods immediately, but A receives cash from B in future. So that means A is going to receive the amount from B in future. But in future, B may or may not pay the amount of cash. In future, B may or may not pay the amount of cash. Okay. So in this case, Mr. A would like to have a written commitment from the purchaser to pay the amount on a certain date. That means B has to give a written promise. That written promise or written statement is known as bill. So this bill is bills receivable for A and for B it is bills payable. That means bills receivable is an asset for A, for B bills payable is a liability, Okay, got. In this example, there are two parties. A and B. But really speaking, there are three parties to bills of exchange. So the first one is drawer. Second one, drawee. Third one, payee. Okay. So there are three parties to bills of exchange: drawer, drawee, and payee. Okay, good. So who is drawer? The person who draws the bill or who makes the bill is known as drawer. Once again, drawer means the person who makes the bill is known as drawer. In this example, A is the drawer. A is the drawer. He is the seller of the goods or creditor. Okay. Next, second one, drawee. Drawee means the person on whom the bill is drawn, or the person who accepted the bill is known as drawee. In our example, B is the drawee. So he is purchaser of goods or acceptor of goods. Okay, or debtor. So the third person is payee. So payee means the person who receives the amount on the bill is known as payee. The person who receives the amount on the bill is known as payee. So in this example, A is the payee. So that means A is the drawer as well as payee. Okay. Sometimes payee may be different person. Okay. For example, Mr. A direct to B to pay the amount to C. To pay the amount to C. So here C is the payee. C is the payee. So who is drawer? The person who draws the bill or who makes the bill is the creditor or seller of the goods. Drawee. The person on whom the bill is drawn is known as drawee. He is the acceptor or debtor. Payee. Payee means the person who receives the amount on the bill is known as payee. In this example, A is the payee. In some cases, some other person may be payee. For example, Mr. A directs to B to pay the amount to C. So here C is the payee. Okay. So next come to another area. Due date of the bill. Due date of the due date of bill. Okay, good. This is also very important. So due date of bill. So due date of bill or due date means the date on which the bill becomes due for payment. The date on which the bill becomes due for payment, it is known as due date of the bill. For example, on 1st January 2024, Mr. A sold goods to Mr. B for say rupees 10,000. On 1st January 2024, A sold goods to B for rupees 20,000 and drew a bill on B for the same amount. For the same amount. Mr. B accepted the bill. Mr. B accepted the bill and returned it. To A. The bill is honored on its due date. Okay. So on 1st January 2024, A sold goods to B for rupees 10,000 for 3 months. Okay. For 3 months. This is a very important. For 3 months and drew a bill on B for the same amount. B accepted the bill and returned it to A. The bill is honored on its due date. Honored means the drawer receives the amount on the bill, then we can say the bill is honored. Okay, good. So in this example, what is the due date? So once again, due date means the date on which the bills becomes due for payment is known as due date. So that means the bill is drawn for 3 months. That means from January 1st to February 1st, 1 month. From February 1st to March 1st, 1 month. From March 1st to April 1st, 1 month. April 1st equal to 1 month. That means 3 months. January 1st to February 1st, February 1st to March 1st, March 1st to April 1st. Okay. So April 1st is the due date. Due date. Okay. April 1st is the due date. But we are going to add 3 days to this April 1st plus 3 days plus 3 days equal to April 4th. So April 4th is the due date of the bill. April 4th is the due date of the bill. So once again, due date equal to April 1st plus 3 days equal to April 4th. So these 3 days known as days of grace. That means we are allowing, that means A allowing 3 days to B for arrangement of funds. Hence, these 3 days are called days of grace. Due date is nothing but the date on which the bills becomes due for payment is known as due date. That means on April 4th, B is going to pay rupees 10,000 to A. That is the meaning. Okay. So, drawer, drawee, payee, to whom the bill is receivable, to whom it is payable, due date of the bill, and days of grace. So, these are the things we have discussed. Okay. So, till then, thank you. Thank you very much.